Well, new car sales in South Africa increased by 7.3% year-on-year in November to over 53,000 units. Low interest rates and new models were the main drivers that attracted consumers. And joining us for a look at the vehicle sector is Sydney Soundy, Head of Vehicle and Asset Finance at Standard Bank, and Leo Koch, who's Head of Corporate Communications at Toyota South Africa as well. Welcome, gentlemen. Thanks so much for joining us this afternoon. Sydney, the headline numbers that have filtered through, what have you made of them? Any surprises on your end?
Very steady, no surprise at all. We were expecting that by the end of this year will be just about 10% growth compared to last year. We think that it will end just about 9.7% growth in this year. Mm-hmm. So if you look at the month of November, 7.35, it's in line. November is still a little bit better than the previous two Novembers. So in essence, there has been steady growth in the market.
Leo, it's Lindsay in Cape Town. Welcome to Power Lunch. At Toyota, what's happening? What are you seeing? What have you seen over the last year as fuel prices, I see here, have gone up 41%, I think, which is an extraordinary increase. Are people then changing? Are they switching to more affordable, more fuel efficient and smaller vehicles? Has that been a trend?
Lindsay, most certainly. If you look at the market for the entry-level segment, which we count up to the C segment, so it's A segment, B, the sub-B segment, which is more your affordable vehicles, and then the C segment, that's grown to being about half of the total vehicle market. It's seen significant growth over the last 3 years, and that's where we saw our biggest decline in our market share until we introduced vehicles in that segment. So it's definitely grown, and you see people still buying vehicles, but buying down, most certainly.
Where we've got consumers buying down, let's take a look at how this impacts your prices. I mean, we've got here in the note from Standard Bank today highlighting new vehicle prices have grown at lower levels than real income growth. So how is that affecting your pricing power?
Well, there's definitely some pressure on pricing. Competition has increased significantly, and as people start buying down, you see them being a lot more concerned about what vehicle they get, how much vehicle they get for their money. Mm-hmm. What we see now in terms of marketing our vehicles and presenting our vehicles, and I'm sure Sydney will agree, there's a lot more emphasis on what can I afford per month. So we've put a lot of effort through our Toyota Financial Services into the financing packages, and that also, secondly, the specification of the vehicle. So how much can I get for my money?
Sydney, I think at the beginning of the year you were predicting something like 10 to 12% increase over the 12-month period, and it seems as though we're going to achieve that. Looking forward to 2013 though, is there going to be some headwinds? Because I've got some macro stats that suggest there might be. And I mean, apart from the strikes that have had an impact on the economy and therefore confidence, and therefore I would have thought vehicle purchasing, there's also household debt to disposable income coming in at over 76%. Despite the low inflation rate in the car market, do you think 2013 might be a little bit less glamorous than this year?
Indeed, if you look at growth 2011 compared to 2010, that was 15% growth. And this year will end up, as you said, a steady just under 10%. So for the last 2 years, it has been steady growth, good growth. And therefore, in terms of expectations into the next year, given the issues that you've raised, the expectation in terms of economic growth, although the interest rates are expected to still remain a little bit flat into the next year, we think that the growth is going to be anything between 4 and 7%. My view, and that has already been shared, is about 6%. And I see NAMSA has come out to say 6%, and if we're lucky, 8%. Mm-hmm. So I think that's the single-digit number that we're seeing for the next year.
Certainly, we had Leo highlighting, how they've had to adapt in order to win greater market share, where their focus had to be redirected. From a financier's perspective, I mean, at Standard Bank, we've spoken about it before, where we've looked at the average contractual term increasing. We've talked about settlement terms. We've talked about loan amounts as well, and financiers themselves having to be creative. Is that becoming difficult to do now as you manage risk on the other end as well, as Lindsay highlighted, with that debt to disposable income ratio increasing to above 76%, but also impaired credit records remaining relatively high, up 46.7% of that total active credit consumer base?
Indeed, I think the consumer is under pressure, given the stats that you've just shared with us. But if you look at, comparatively speaking, the issue that you raised earlier in terms of income growth versus the vehicle price inflation has been lower than income growth. So it gives us some leeway. Financial institutions have always been responsible about how they finance. That will remain the case. But I think the economy, the activity in the market, the competition that Leon is facing with the rest of his competitors is making it a little bit easier in terms of contributing to sales, because they're introducing low entry-level vehicles that are affordable to consumers. So I think those activities and incentives that are being put into the market, and the need to replace those vehicles is always going to give us some leeway. We will remain responsible because that's how we need to look at it. Otherwise, we're going to get our consumers into unbearable debt, and we don't want to do that.
Leo, you mentioned that the entry-level vehicles have been popular. That's been a growth story for various reasons, notwithstanding petrol and all sorts of other things. But I'm just noticing here some statistics saying that the average load is actually increasing in all sorts of different segments. But if you we're increasing the number of cars that we buy, but if you put them all together, what is the value? Is the value of the cars that we're buying going up? There may be more, but they're cheaper cars. So is the actual total spend actually static?
What we've seen, Lindsay, from our side is a slight drop in the value of each car that is financed, and an increase of the financing period through Toyota Financial Services. Our share of that market's grown quite a bit through Toyota Financial Services. So people are definitely looking to extending. So it's definitely a cash flow play for a lot of the people that are buying down. Having said that, last month the car that sold the best to the private buyer was the Fortuner, which is a larger SUV. So it's not only the entry-level segment that's growing, but in that market specifically, yes, the values may be slightly lower than the previous year, and the period's a bit longer than before.
While we import a lot of our vehicles for sale, in the domestic scenario, Sydney, and with further risk to the growth numbers that we're seeing today presented, if the exchange rate depreciates, for example, we export as well. What are the kind of trends you're noticing in that export category? Because we've seen month-on-month exports increasing 14.7%, and then on a year-on-year basis, 39.5% increase coming through.
Yeah, so on a year comparison, it's an increase of 1.5%. It is actually good in the context of what's happening globally. But I think Leo is best placed because they are amongst the top exporters in the country, and perhaps he knows better. So
Leo, let's get your perspective there.
From our side, we've seen a lot of the manufacturers move the export markets away from Europe. That was a bigger concern. The States have become a big concern, and I'll talk about fiscal cliffs and all that kind of thing. So from our side, for instance, we've spread our risk. We're now exporting to 57 markets, where in the past you would do 3 or 4 big markets that you would export volumes to. So smaller numbers to a wider number of countries. And South America and China has become popular amongst the local manufacturers. Quite a distance from our market, but as is all the big markets. So you've seen a diversification. And then we are stagnant for the year, but we expect, as some of the other manufacturers ramp up their production, we're expecting Ford, for instance, and BMW to ramp up their production of the new 3 Series and the new Ford pickup. So those will improve. So next year we expect quite a significant jump in exports. But this year staying stable is actually a good sign given the global economic circumstances.
Something that we should keep an eye on moving into 2030.